What's up, everybody? Hey, this is Kelly Cook. It's time for YouTube Live here at the Everything Phoenix YouTube channel. Guys, thank you. It is Tuesday, 4 o'clock Pacific, and it's that time to get started. You guys know that we love to talk about a lot of things, everything Phoenix, and we are diving today on what buyers and sellers must know now. Okay. There's a lot of things happening right now, and listings are failing. They are not selling at the same clip. We're going to go over the listing success rate, dive into that actually deep here today. And we're going to knock this out of the park here and show you some hidden gems. Okay. We're going to show you some places that you can find affordable housing still in Phoenix. That's right, guys. And this is not in places that are just run down with maybe crime or places like that, maybe you wouldn't feel that safe to live. These are places that are very nice places with some relatively newer homes and newer commercial construction that have been developed here recently. So where are those places? We're going to dive in and show you those hidden gems on this show today. So if you are someone who doesn't own a home currently, this is what you needed to listen to, because we're also going to talk about the rent rates in Phoenix. So you have to live somewhere, right? I guess you could be homeless, but that's not very fun. So you got to rent, or you can own and buy a property to live in yourself. Now, if you think about maybe trading up or trading down, this could be a good episode for you to watch too, because you need to know where the affordability lies. Maybe you're going to take out your equity because you're moving down and you want a smaller house, but you want to take some of those chips off the table. I don't blame you. I think it's smart to do. So this is going to be interesting. We're going to share my screen. I'm going to go over this here in just a second. We have a lot of good stuff to cover on today's show, and we're going to go quick. We're going to go 20 minutes probably so, action-packed, and we're going to rock and roll. But if you don't mind, where are you watching from? Put it in the chat. We have multiple people on this channel right now. And if you don't mind just putting where you're watching from, I'd really appreciate it. It helps the algorithm curate the content even better. And give us a like. Smash that subscribe button if you don't mind. Okay, I'm going to share my screen here in just a second. And I think it's important that we're going to cover these hidden gems, guys. This is going to be phenomenal. They got some good information here we're going to show in just a second. If you think I wasn't kidding, there it is right now. But we can't go there yet. We're going to start off with talking about where we stand, the overlying foundation of the housing market today. It is August. It's August 5th, right? We are in August now. Most school districts in the Phoenix area are back in session. You know what that means? Structure. And if there's more structure, that means people are now focusing on things they probably want to do or need to do. And a big purchase like a house could be on that list. So the demand typically rises this time of year. Right now, we're at 74.8 on the Crawford Market Index. Okay. And as we know, a balanced market starts at 90 and goes to 110. We are not in a balanced market. This is not a balanced market by any stretch of the imagination. But this is a market that, for all intents and purposes, is improving. Guys, we were at 70, 71 here just a couple of weeks ago. Now we're going up to 74.8. This is a good sign. It could be better, obviously, but it could be a lot worse. Now, I just want to point out a couple of things. We're not going to go through all these numbers here, but understand the pattern. Check this out. From month over month, closed transactions down 4%. Closed new homes down 8.6%. Closed resale transactions down 2.7%. Overall median sales price is a little skewed, up 1.4, but the resale median sales price was $450, unchanged from July of 2024 to July of 2025. And the median home sales price for new home construction actually went up 5% month or year over year from July of 2024. That's obviously not the norm. But let me show you this. We have some, by the way, check this out, guys. If you want to see your suburb on here real quick because you're local, there you go. Are you going up? Are you going down? Is there more green or more red in your suburb, your neck of the woods? Because this is taking into consideration supply and demand working together. And you can see right now, there's a lot more green that's been on this forum than a long time, guys. Green is good, and we have had a lot of red going in the wrong direction for a long time. So it's good to see some green back on the board, but a long ways to go still. Okay, but let me show you this graph right here. Listing success rate, guys. Okay, not good. not good. We are down around 61% as of July 28th. I have an even more recently pulled graph I'm going to show you here in just a second. But let's look at the commentary, okay? We can see a long, relentless decline from the 74% level in March of this year down to the low 60s in late July. This indicates that listing agents and their sellers will need more patience and a better strategy than last year when the listing success rate stood at 71.2%. The long-term average stands at 69.3. Monthly cancel listing counts are up 42% from a year ago. With 4 out of 10 listings failing to sell, buyers will start to feel the power more acutely and argue for more concessions or a lower price, or possibly ask for property upgrades at the same price. Although supply has declined a little over the past 2 months, demand remains weak and the CMI remains below 100 for 13 out of the 17 largest suburbs or cities around the Phoenix area, guys. That's not good, okay? If you want even more of this sauce, here you go. Here's some more sauce for you on the listing success rate. 54%, guys. Look at this graph. This is August of 2025, 54%. That means out of 100 listings that go on the market, 54 will sell. Maybe in some places you're like, well, it's not that bad. It's bad. If you look at where we're at, guys, we have not been at 54% until most recently, December of 2010, when we recorded a 51% listing success rate, guys. December 2010, guys, 2010 was not a banner year by any stretch of the imagination, but the listing success rate started to improve from there, and we got into the 69, 70 percentile pretty quick in January 2012, excuse me, when the market started to turn. Okay, so what does that mean to you? What does that mean? This is the worst listing success rate since 2010, 15 years. Okay, do you think it's maybe just the perfect timing because we're catching it right at the tail end of summer? School will just begin and people will start paying attention, and there is demand out there. So it's going to jump back into the market pretty soon? I don't know. It's possible, but what if I show you this? Because this could help, okay? What if I show you this? This could help. This is the 30-year fixed mortgage rate. Look at the blue line here, guys. That's a pretty good dip that went down from 6.75 to about 6.58, okay? That's good. Now, will this trend continue? This just happened like today, okay? Who knows? It could bounce right back up to 6.75, 6.8 anytime. But that is a step in the right direction. If the rates get down around 6.5 and they hover around there for a little bit, people get a little more confidence, and you never know what could happen. Matter of fact, look at the affordability that actually occurs when you have rates that come down. Here we go, guys. Mortgage rates dropped to the lowest level in 10 months. 10 months, upping purchasing power in a buyer-friendly market, okay? The daily average mortgage rate dropped to 6.57 on August 4th, the lowest level in 10 months. This means a home buyer on a $3,000 monthly budget, listen to this, has gained roughly $20,000 in purchasing power since May, when the daily average rate hit a recent peak of 7.08%. Guys, we're talking $20,000 of purchasing power that you as a buyer just received because rates now are at 6.57, almost to 6.5. What if it goes to 6.3, 6.2, 6.0? You get the drift of what's happening. We're talking $30,000, $40,000, $50,000, $60,000 of purchasing power, even if the prices do not come down one bit for the house that you want to buy. That's pretty cool. So we'll see what happens with rates. That's why people typically buy a monthly payment, not a purchase price of a home. Okay, so here we go. A buyer on that budget can afford a $458,750 home with today's mortgage rate, compared to that same home being $439,000 that they could have bought in May, guys. So your budget just went up to $458,000 from $439,000 just over the course of 3 months or so, guys. You can see how the payment comes down and affordability kicks in. To look at it another way, I love this. Affordability here, the monthly mortgage payment on the median priced U.S. home, which goes for roughly $447,000 across the U.S., is $2,862 with today's average rate. In mid-May, that same home, when they're sitting at 7%, would have gave you a monthly payment of $2,983, over $100 more. Okay. By the way, did you see that 447 number? that's very reflective of where Phoenix stands overall from a median purchase price. So, guys, our marketplace. I know. Listen, I know everyone's going to sit there and go, I know it's expensive in Phoenix. Home prices are through the roof, and if you compare them to just a couple years ago, 3-4 years ago, that's true. That is true. They did go up significantly, especially since COVID, right? The last 5 years. However, our median purchase price sits right at just below actually now where the US purchase price on the median is at 447. We're around 444 right now in the Phoenix area. So if you go somewhere else in America, chances are that the median price of the home in that marketplace will be 447. Just saying. Now, obviously, we know there's markets that are much more inexpensive, like Tulsa, Oklahoma, or Indianapolis, Indiana. But we also know there's more that are more expensive, like Seattle, Washington, or New York City, Chicago, etc. So it just depends where you're going to be. But just put that in perspective for a second, because I know it feels very unaffordable, which I can get the fact that it is in many ways, especially over the past several years. But across America, the median price point is very much so the same. So get the average monthly payment being $100 less today with a mortgage rate of 6.57 than what it was. Okay, than what it was in May just a few months ago. The same home. Okay, that's your purchasing power and how much it's affected by rates coming down. So if the rates can keep coming down a little bit more, my goodness, your monthly payment will go from $100 cheaper on the median average, okay, to $200 cheaper, maybe $300 cheaper a month based on where the rates go and how low they go. So that's something to pay attention to. And that's why a lot of people who are, the gurus believe that if you can just pull that lever of getting rates down around 6%, let's call it, man, the economy would do a lot better. People would jump in and buy a lot more. Now, maybe we don't want that, but you can't have it both ways. Okay. If you don't want that, well, hold on. We don't want people jumping back in the market because we want the prices to come down. Okay. And so I can jump in. Well, you may not get the price you want on the house based on how you feel it should be priced. The price is the price. The market sets it. And I hope it comes down and corrects a little bit for everybody's sake to an extent, right? But at the same time, the market will correct itself. No matter, it may not come down 10% like you want it to. It may only go 3%, 2%, 4%. And if you don't jump in before then, obviously at some point it's going to swing back up because we know that's true. Maybe it'll be in a year from now, 2 years. It could be 3-4 months. We don't know, but it's going to go back up at some point because it's cyclical. It can't help itself. It will happen. So the key is to buy when you feel the time is right and a payment that you can afford. Okay, that's the key. Now let me share my screen, and I want to show you a couple more things here because we're just getting started, guys, with some nuggets here, man. We're dropping bombs, okay, and some nuggets here of knowledge today. Now there's a success rate, as you can see, 54%. One more graph about listing success rate. You can see again, it's all about the same, going the wrong direction for listings wanting or needing to sell. Okay, we're about 64, so now 61%. This one's actually July 26. It's actually a little bit older than most. Okay, now let's look at a couple of things on the housing front. Housing shortages hit low-income renters the hardest, a Pew report finds. So we're sitting there going, okay, well, if the housing market is unaffordable because it's expensive to buy a home, I'll go rent. Okay, well, that may be fine for your price point in your neighborhood where you want to be, but overall, this Pew report here is stating that the housing shortages overall are making it hard for low-income people to, again, just afford housing in general. Because what this goes on to say is that about 30% for low-income renters, in fact, renters in general, they spend about 30% of their income right here. Okay, nearly half of renters in the U.S. spend 30% of their income on rent and are considered cost burden according to the U.S. Census Bureau. Rent increases are connected to a shortfall as many as 7.1 million rental homes for low-income renters. Okay, what they're saying is we're short housing units, whether it be condos, apartments, whatever. We're short 7.1 million housing units for renters alone across America. Guys, and here's the problem, because we know that these home builders, a lot of them are publicly traded companies. They have to report to shareholders, stockholders. They got to do their best to make sure the stock performs. And so when the market slows down, what do? They slow down too, because they can't just keep pumping out money, because even though in the long term it's probably a smart thing to do, In the short term, the stock gets hit hard and people freak out, they sell, liquidity goes down, and they're kind of in a pinch to an extent, right? But the smart ones, in my humble opinion, will keep building to an extent at least when the market is not doing well. Why? Because it takes a while to put out a community, the infrastructure, the entitlement of the land, the surveys, all this stuff, right? And then, of course, to build and go vertical takes a long time as well. And so if it's true that maybe rates come down in 6, 12 months, and therefore maybe demand increases and people jump into the housing market to buy, and we know there's a shorting housing for buyers and renters alike across America in the millions and millions and millions, wouldn't it make sense to position yourself ahead of the other people who pull back? Okay, keep building, get those houses ready for deliverability to someone to buy and move into when maybe the market turns around and you time it up kind of well. Now, it's a gamble, it's a risk. And again, people don't want to risk, these companies don't want to risk their shareholders, investors' capital, but it's a strategy, one that I think not enough people actually employ. Just my 2 cents again. But this is a big deal, guys, because you automatically think that when there's a shortage and when homes are unaffordable to buy, rents will maybe come down. And that's just not the case, okay, all the time. It is the case in some cases. Like, for example, with overbuilding right now, okay, right here, guys, in Raleigh, North Carolina, Dallas, Texas, Austin, Denver, San Antonio, yeah, rents have come down. Okay, so that is a good time a good thing where you have cities that overbuilt a little bit, but then you have other cities like New York City and places that are smaller across America where they haven't increased the housing to meet demand when it comes to the jobs they're creating. Therefore, population goes there. They haven't met that demand. And so you have a shortfall, and that keeps prices up. Now, if we go over to the Cromford report, right here, and I show you where rents are today in Phoenix. Now we're talking Phoenix, right? We went from macro to micro. Look at here. We're at 1.36, and that red line remains steady. Matter of fact, if you go micro on the micro, if you catch my drift, you're at 140 a foot. It went up. Rental prices went up. Okay. Why? Because we don't have an overabundance of supply of homes, and we are short. Now, right now, is there a lot of homes on the market? Yes, there are. So right now, if you want to buy a house today, tomorrow, you will have a plethora to choose from. But that won't stay that way very long because you, again, have population surplus of influx of people coming to Phoenix, and the jobs are continuing to pour in to Phoenix, at which the population will follow. So if you do 1 + 1, it does equal 2 in this situation. And right now, the rents are actually going up a little bit to $1.40. But again, the moving average of that red line is pretty steady for the last 2 to 3 years, as you can see, for rents in Phoenix. Okay, now a couple more things to cover, and we are done. But here's an interesting one, guys. Housing inventory growth is starting to stall. The seasonal decline in new listings is underway, guys. Now, Phoenix, we're a little bit different than the trend because we have a seasonal market. So we will see more listings than most cities across America come onto the market. Now, it's going to be a decline. If you look at the graph, I'll put it up next week. Active listing count as we head to the year, looking at last year, year before that, and last 5, 10, 15 years, it typically will decline a little bit at least because compared to March, compared to April, compared to January, February, because people wait till after the holidays, right? However, compared to most places across America, we have a listing, not surplus, but we have more listings than most because we have nice weather as we head into October, November, and December. So you have more to choose from. But across America, Housing Wire says we're going to have a seasonal annual decline of housing inventory growth, and it's starting to stall. Now, if you don't have good demand and this stalls, this will further keep prices from decreasing, right? Or at least blowing up and just plummeting. Probably not going to happen, okay? The seasonality of the market will work against the person who sits there today and believes the market's going to crash. Again, anything is possible, but the data will tell you that if you're at the casino and you're rolling the dice, you probably want to place your bet not on the fact that it's going to crash, okay? Unless you like losing money. But again, anything's possible. So I hear you, the naysayer out there. I hear you. It could happen. It could. But again, the chips are stacking up against you at this point in many different ways, from many different angles with the data and data alone. No emotion. No emotion. Okay? No emotion. We don't like emotion around here, right? Okay. So I'm going to show you a couple more things, and we're out of here, guys. But hopefully you got a good perspective on where we stand today. Listing success rate in Phoenix is not good. But at the same time, demand is holding fairly steady, even though it's very low. And so you have this supply and demand coming closer together very slowly. And we'll see what happens now that people are back in play with a consistent schedule calendar, at least people who are families with kids from, grades kindergarten to 12th grade at least, right? Okay, a couple more things here and we will let you about your way, guys. But there's a couple good articles. I might just end on this one because this might just do it. Hidden gems, the best valley deals for first-time entry-level homes can be found in unexpected places. Where are they, Kelly? You're in luck. I'm going to show you right now. Buckle up. Here we go. We're going to go fast. But only 13% of Phoenix homes sell above asking price. That's it. Okay. Buyers now have leverage in Phoenix's cooling housing market. Okay, that's good. Surprise, Arizona offers affordable homes with builder incentives for first-time home buyers. Okay, yeah, we know that. But where are some more of those places? Well, there's Tina from the Crawford Report, who we all love. But here we go. Okay. Now, spoiler alert, you're going to have to go a little more on the outskirts of the valley to get that place that is, fairly safe, no crime and not crime laden, right? And maybe a little bit newer in terms of the homes being built or brand new even, and affordable. Okay. But get in the game. Now, before I show you the rest of this article here, because it's good, here's my message to you. If you're not in the game, get in the game. If you have to drive to Coolidge or Queen Creek or Buckeye on the outskirts of the valley and you want to be more in the nucleus of the valley because you like to go club in Scottsdale on Friday and Saturday night, I hear you. I was there once. But sacrifice, man. I'm just telling you, sacrifice. House hack, get the duplex, rent the other side out, live in the other side. But Kelly, it's not an area I want to be in. I don't care. Okay. But your future self, 5 to 15 years from now, will thank you for making that sacrifice for 1 to 5 years to get in the game, because hopefully in that market cycle, 1 to 5 years, maybe 1 to 7 years, if the market's really bad, it will still in 7 years is the market cycle on average. Okay. 1 to 7 years, you will have equity in the house. You will then have something you can take to trade up. Okay. To get that nicer house in that better neighborhood. It will happen, but it takes time. It's not a microwave. It is a crock pot. If there ever a crock pot that's halfway broken because it cooks so slow. Okay. But get in the game. All right. Now, back to this message here. Here we go. All right. Overall, Maryville, West Phoenix. Okay. Older, but affordable. El Mirage, the Sun Cities in the Northwest Valley, Buckeye, and Pinal County are the least expensive areas, where homes with a median size of 1,524 square feet sold for between $200,000 and $400,000, she said. Okay. Looking at homes between 1,300 and 1,600 square feet, you have Glendale, Surprise, Goodyear, Avondale, Tolson, and Levine. They have all featured properties under $400,000, guys. This is affordable housing in Phoenix. Okay. Now, look at Coolidge. Hold on. Don't forget about Coolidge. Coolidge has some good jobs, guys. Kohler is going out there. Kohler plant, the kitchen, faucets and sinks and stuff, right? Coolidge, which is an hour drive southeast of downtown Phoenix, had 13 home sales between $130,000 and $293. Guys, is this Tulsa, Oklahoma? Is this Chattanooga, Tennessee? No. This is not Sioux Falls, South Dakota. This is Arizona, Phoenix, an hour outside of downtown Phoenix, in Coolidge, where there are some jobs and some things going on. A lot of new construction. Okay. Newer homes too, by the way. All right. Adding it up, you have Maricopa County, you have Buckeye, Sun Cities, and Surprise are the 3 best shots. Buckeye, Surprise, and the Sun City Festival, Sun City West, right? And so on and so forth. Okay. So there you go. And there you have where the best deals are for the Phoenix area right now. So if you're looking for something to get in the game, I'm telling you guys, you may not want to live in Surprise right now. Surprise is great, but maybe because of where you work or where your friend base is or how you grew up, you don't want to be out there. Okay. It's no knock on Surprise whatsoever. It's in the Northwest quadrant. You have Coolidge is an hour away from downtown Phoenix. That's a drive, right? But get in the game, build equity. Over time, the housing market does this. It may go down for a little while and up for a little while and then down again like this, but it doesn't go like this in a straight line. It goes like this at a 45-ish degree angle, right? That's a terrible drawing in the air, in the sky, but you get my point, okay? Long-term, slow cook it, crock pot style, cannot lose over the long term, okay? The stats, the data will prove me correct. All right, until next Tuesday, tune in again here, guys, 4 p.m. local time. Until then, Phoenix, keep it classy.